Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, TGIF, everybody. I hope you guys have a wonderful weekend coming up, November 2nd. We got a couple economic news releases. The big one we've been waiting for all week is the job numbers, the non-farm payrolls for the month of October. Uh, they had a revision of the last several months. They actually revised them higher. So last month, in September, it was originally 114. They raised to 148, and then August they even actually rose up like around 194, 192. So last couple of months, actually, they raised it up there, which they're using that as explanation why there was that dramatic decrease last month on the unemployment rate. Went from like 8.1 down to 7.8 on there. So the forecast this month was 120,000 new jobs, and it came in at 171. So pretty big number there, big increase. The investors, Wall Street was all clapping about it, so everybody was excited about increasing the job numbers. So good numbers there. So we got the unemployment rate for the month of October, so at 7.8. We figured it'd go up slightly to 7.9, and it came in at forecast. So slightly higher tick there, as this is a little bit sensitive on how they get the numbers from this. And then they have factory orders for September. So August they had a negative, it contracted at 5.1% reduction in orders. They figured it'd go up to about 4.7, and it came in right about expectations, just slightly higher, 4.8%. So next we'll go ahead and look at the headline news here. And stock market's down currently, and that's primarily due to with all these good numbers, they're up a bit, and then they basically came in with election jitters. So now they got a little nervous. Even though we got great numbers, now they're going from technicals to more emotional. What's going to happen with the elections for next week? So that's why the gains that were early on kind of came back down. So let's take a look to see how the bond market's reacting and what interest rates are doing. So as we see, we started the day off a lot lower today. We're up about 21 basis points. And so right now we're about 104.75, where we closed at 104.69 yesterday, so we're a little bit higher. So the pricing's really about the same as where we were yesterday. So I would say pricing early on, if you're on the East Coast, probably had worse pricing, and they probably had some price improvements since then. Until right about now, and right now you'll see some improvement. So they may wait until later this afternoon as we get closer to see how the markets, if there's any shifts backwards or not, before they give any price improvement. So if this continues, we'll have a price improvement. So basically what that means with that price improvement, we'll be the same as what we were yesterday. If it pulls back, then rates will either remain the same where they came in lower than yesterday, So all right, you guys have a wonderful day. Hopefully that made sense for you folks. So basically, if we keep where we're at, we have the same rates as where we were yesterday. If the market pulls back and the bond market goes back down here, rates will go up a bit. All right, folks, have a wonderful day. Thanks for stopping by. I'll see you guys on Monday. If you guys like to see these videos on a daily basis, just come by mikesdailymarketreport.com. There's an upper right-hand corner. You'll notice there's a feed box or feed burner. You can subscribe right there, and you'll have these emailed to you on a daily basis. Have a wonderful day.